Today we are going to start a new topic, Forex. Means today again we are going to go abroad and travel foreign countries. Now Forex, foreign exchange market. So before I start this question, I want to start this topic with a small question for you to think. The question is, should you settle abroad? Means should you settle in a foreign country? Means, what do you think on this? Means I will be answering this question towards the end of this PPT, but I'm asking this question so that you have a clarity what we are going to study in this slide basically. So in this PPT, we are going to start foreign exchange, what exactly it is, who regulates the foreign exchange, how it is regulated. You might have wondered since childhood that who is regulating dollar's price, as dollar INR means how it is regulated. Secondly, is it okay to settle in some another country? Means what are the pros and cons that you should be seeing? And what is the standard of living in all these countries, right? So we are going to learn all these things today. So again, we are going to travel in foreign countries today. Let's begin the session. So Forex means foreign exchange. And why this foreign exchange would takes place again, guys? Two people always meet, buyer and seller. Means someone would be buying something, someone would be selling something. It could be goods and services. But this is happening internationally. So there is foreign exchange taking place. So if it is happening, internationally. So for example, you are Mr. A who lives in India. Today you are dealing with a client in Dubai. Tomorrow you are dealing with a client in China. Day after Russia. So you are dealing multiple country people, right? So if you start dealing with different currencies, it will be so difficult for you. So that is why one currency is shortlisted, right? And this exchange of goods with the exchange of a currency is called as foreign exchange. Now, this currency which is shortlisted could be dollar, could be another country as well for the betterment, for the ease of doing business, right? What I wanted to say over here is that there is exchange of goods and services in exchange of foreign currency. That is why Forex is taking place. It's not domestic. We are going again international, guys. So, global marketplace for exchanging of national currencies against one another. Now, one more thing over here is that, guys, Forex and foreign currencies are a tool of investment as well. It's not for just exchange of goods and services. It could be for, for investment purposes as well. All the central banks, they also have Forex reserves, means they buy foreign currencies. That foreign currency, whenever appreciates, they can sell it off and redeem their domestic currency, and they can use that domestic currency in a better way. Similarly, you and me, for example, today I buy $10, right? This $10 whenever will get appreciated, but I can redeem that, and against that appreciate that gain which I got from this currency, I can enjoy that thing. So that in that purpose also this foreign exchange can be used. Now, one thing I would like to tell you guys, this foreign exchange market means it operates 24/7 as such, but it is banned by government of India. So you can't do forex trading in India, at least in India. And all those apps which tells you, you might have seen advertisement in YouTube as well that you can do forex trade and all that. It is not legal, guys. Firstly, it's banned in India. Second, it's very risky, and the margins are so low that you have to buy in huge volumes to make substantial amount of profits. So it is the largest market in the world and it operates 24/7. And why Indian government has banned it? Because again, because of risks and all that. Now, who are the people who come in exchange? What is the point of contacts? Means why this foreign exchange is so common? Means who generally do these foreign exchange on day-to-day basis? Tourists, absolutely. Means whenever I'm going to a new country, I would be exchanging my domestic currency to their currency, right? So tourists, very obvious. Imports and exports. So if you are importing something from the world, from any country of the world, or if you are sending something or exporting something to any country of the world again, so again you will be having transactions in their currency or your currency. So there will be exchange point of contact of the currencies. Traveler checks, in earlier days there were no credit cards, right? So what we used to do is if I am going to and there was no online transactions as well. So if I wanted to go to America, so I can't carry huge amount of cash because firstly There are legal foundations of that. Secondly, it is not safe to carry cash. So what I used to do, I used to take some checks from my domestic bank, and those checks I could have redeemed in the same branch of uh, the branch of the same bank in another country. If that branch is not available there, I can that bank would be having some tie-ups in that country. So what I would do, I would exchange that check in another country. So it will act as a ATM card for me. So these are called as traveler's check. But that is outdated now. It's not used. But again, it was a way of exchanging the currency. So who are the main stakeholders which are involved into this? These are banks, central banks, commercial companies, hotels also sometimes. Some hotels are also allowed, forex brokers, and investors as well. As I told you, you can't do forex trading, but you can buy currencies for investment purposes. What are the benefits of forex? Now, again, it's quite simple, and you must be aware of all these things. International trade, obviously. International trade cannot take place without foreign currencies exchange. Foreign currency exchange takes place only in international uh, trade, basically. It is good for better competition that we had already discussed that international trade, global trade is good for competitions. We get better things, we get better goods and services and efficient goods and services, right? Now, I would like to ask you a question, guys. What is the difference between FDI and FII? Means what exactly they are and what is the main difference between both the terms? You might have heard these terms multiple times, FDI and FIIs. Think and then answer. Now, I want you to pause and then answer. In the meanwhile, I'll let you know what the answer is. See, guys, if a foreign company is investing in our country and they are starting a for example, a manufacturing unit, they are starting a factory or a service, you can say it could be any services they're delivering in India. That is FDI, foreign direct investment. Foreigners are starting their businesses in India. It could be Samsung, who is manufacturing his phone in Noida. It could be McDonald's, who has started a burger chain in India. It could be a simple service company as well. It could be an office of Facebook as well. So that is, they are starting their offices in India. It could be service sector office. It could be goods as well, manufacturing as well. This is FDI. Means now, what is the benefit of FDI for us? First, they are giving manufact they are starting manufacturing over here. So manufacturing will increase the GDP. One thing. If they are starting their offices in India, so that will give employment to the people. So people will get employed. So it will be good for our per capita income. It will be good for the growth of the nation as such. So FDI is good for a country. And it's generally it started after 1990s. Means our late Mr. Manmohan Singh, he opened the market for the world. And because after LPG reforms, FDI started in India. Now, what are FII? Foreign institutional investors. These are the people, again from the foreign country, but they don't start a business here. They invest in businesses. They will either become my partner in a business, for example, Y Juice. In Y Juice, Chinese people had invested their money, means they became shareholders in the company. That is FII. They could invest in our stock market itself. So that is also FII. Many people sitting in foreign countries, they invest in our stock market. That is also foreign institutional investment. They are investing in our stock exchange for their better returns. They are investing in our companies, our startups. That is also FIIs. Means they are directly not starting a business, that's directly not starting something. They are investing in either pre-existing businesses as shareholders or you can say venture capitalists or angel investors, or they are investing in our stock markets. So these are investors. So what is the benefit of India? Indian government, they tax these people. And anyhow, the money is inflowing in our country. Again, money supply increases in the country. So it is good for the growth. Money supply is directly proportional to the growth, and it is good for the government as well. They charge taxes on these people. So again, and why? What is benefit for them, guys? As I told you in the previous video, developed nations they grow by the rate of 1%, 2%. But developing nations like India, we grow at very fast rate, very high rate, I would say. So for them, instead of investing in USA, they would love to invest in India or developing nations because growth rate is very high in our countries, in our stock markets. Over there, growth rates are stable. Means they will get growth rate, but not very high fluctuations are there. Those markets are not that volatile. Our markets are more volatile and more growth oriented. Right? I hope this is clear to you. Good investment opportunities. FIIs we had already discussed means Forex provide good opportunities for investments. Means in India, sitting in India, if I have good amount of money, I can invest in any country, right? So there are multiple ways for that. Liquidity is very high. See, guys, we are discussing cash. We are not discussing any commodity or any financial security. Forex is cash, and cash is the highest liquid asset. So we are discussing about currency. So obviously it would be liquid. And guys, it is used for hedging. Hedging is very important term. Hedging is something when we are trying to safeguard our investments. Whenever we think that stock market can go low, right? So if your money is invested in stock market, you can invest in dollars as well. Along with that, so if stock markets goes low, dollar will go up. You can earn money. So we are trying to balance it. Hedging is when you are safeguarding it. So it can be used as hedging tool as well. It's a good opportunity. Now, transactions, guys, these transactions are good. You should be knowing these things. The thing is that in India, we are not allowed to trade in Forex, but these transactions are meant for banks, right? So, types of transactions in Forex market. First is forward contract. We can buy forward contracts for the dollar for these transactions. That can be done, and that is allowed in India as well. If you open Sensible or Zerodha or Sensible, you can find there, INR dollar. You can do forward transactions. And see, again, guys, I'm repeating myself. The margins are so low in pesos that you have to buy volumes. You have to buy a lot. You have to invest a lot in this. Spot transactions are immediate transactions in the market. Current transactions, as the name itself, are on spot, right? Swaps, as I told you in the previous sessions, that swaps is I am swapping my profits with your profits. Means, for example, I have 100 shares of Reliance and you have $100, right? So I would expect that my 100 shares of Reliance will grow at 1 or 2 rupee per share, and you are expecting that your dollar will grow at 1 or 2 rupee rate. So I will exchange my Reliance profits with your dollar profits. So if my Reliance goes up, so all the profits of Reliance will be yours. And if the dollar price goes up, your all the profits will be mine. Means I'm swapping the financial instrument, but we are not giving the ownership. After 1 month, I will take my Reliance shares back and I will give you $100 back. But we will keep each other's profits and losses. Means if Reliance goes up, profit is yours. If Reliance goes down, loss is yours. If dollar goes up, profit is mine. Dollar goes down, loss is mine. But dollar ownership is yours and Reliance ownership is mine. We are not exchanging the ownership. We are just exchanging a contract. It's just a bet. If it goes up, I'll give you this money. If it goes down, I'll give me this money. This is just a bet that is happening. But bet is an active word. We don't use it. It's a contract basically. I hope this is clear to everybody. Now, this is very important. And this is why we are here. Who manages the rate system, exchange rates? How these are managed? We need to understand these things. See, guys, we had discussed that in the previous session in international trade that there are three types of uh, countries: communist, mixed economy, socialist, four types of economies, socialist, and comes the capitalist. So, communist countries are those where government involvement is very high. Capitalist countries are those where government involvement is minimal. They are both different parameter with different parts of the same spectrum. One lies in opposite side, another lies in opposite side. Now, how it works? If government is trying to control the currency rates, right? This will be fixed exchange rates, right? So when government and how government will control the currency rates, that will be controlled by the central banks of the country, right? So if they try to regulate or control the exchange rates, so these types of exchange rates would be called as fixed exchange rates. But as I told you in the previous session, means in the capitalist countries, government involvement is very minimal. Means government had let things to go naturally by the market. This market decides everything, demand and supply. So if there is minimal involvement of government, means everything is decided by the market or by the demand and supply. This is called as floating exchange rate. This was laissez-faire. Guys, I want to highlight a word over here that is laissez-faire. Laissez-faire means free market. Where markets are free, there is no involvement of government. Everything is taking place by itself. Let me repeat myself again. There is a parent, there are parents, and there are children. Some parents are very liberal. They don't interfere in day-to-day activities of their children. Their children are completely liberal. They can do whatever they want to do. They don't need to ask any permissions from the parents. So children are taking care of themselves. They don't need to ask anything from the parents. This is laissez-faire. When everything is taken care of itself by its own, you don't have to interfere. So markets also takes care of itself. Means prices goes up, goes down, everything happens automatically as per demand. This is so in such kind of markets when no one is regulating these, no government involvement is there. These types of exchange rate are called as floating exchange rate. So obviously, such fixed exchange rate would mean countries like China, Korea, North Korea. Floating exchange rate, as always, capitalist country are USA, Canada, European countries. These countries have floating exchange rate. So you would be asking, sir, who regulates in India, sir? Tell me something about India. As always, India is having mixed economy. So India is having combination of both. Managed float means government is also managing. That is why the word manage is given. Float is given means it's happening by itself, demand and supply itself. So it is combination, demand and supply plus RBI. Both are trying to regulate. So RBI doesn't interfere on day-to-day basis. It just keep an eye. It's just a watchdog, umbrella body. You just keeps an eye how the things are working. That's it. Otherwise, it is taking place demand and supply. But if RBI believes that something is not going good, then RBI can take the charge and I would tend to regulate, not manipulate and not try to fix it. It will tend to regulate it. Regulation can be done. That's fine, right? So this is called as managed float. So this kind of currency exchange rates are used in India, basically. Now, guys, this is a very important concept, and I want you to think. And this term will come multiple time in newspapers as well. You might have heard that, oh, sir, currency is getting devaluated. Okay, this is number one. You might have also heard this term that, oh, sir, the currency is getting depreciated. So, what is the difference between both the terms? Are these terms similar or they are having some difference? What could be the difference? You might have said, oh, rupee is getting depreciated. This is a very regular term which is used. Rupee is getting depreciated. You might have, there is devaluation of the currency that is taking place. Or in opposite, depreciation, appreciation of rupees taking place, or revaluation of the rupees taking place. What it could be, guys. I want you to think again. Pause the video and think, and then come back. So, guys, always remember this thing. Devaluation of the currency is the term. It will be only used when the government is doing it intentionally. Government is trying to control it. And why government would try to control it? Before this, I would like to give you a very small example of this, guys. Let's give you an example. So let's make a diamond shape India. This is a diamond and this is India. I'm so sorry for my painting, my drawing. And this is world. W means world. I hope this is visible to everyone. So if, and we are dealing in rupee and these people have dollars, right? If guys, rupee becomes strong, means if rupee becomes stronger, the external world will not be able to buy the things from India. So our exports outside will go down, it will decrease. It's not good for an economy. So if rupee increases, guys, it's very, very conceptual. Please try to understand it. If rupee becomes strong, it means the world will be unable to buy things from us. So our exports will go down, means our exports will go down. If dollar becomes more and more strong, right? So it means their value will become strong, external world's value will become strong. So in India, we will not be able to buy stuff from outside, means our imports will decrease. Means if a currency becomes stronger, if domestic currency becomes stronger, outer people will not be able to buy. Because we are just comparing one and two. This is party number one, party number two. Party number one is the entire world. Party number two is domestic country. It could be any country. So if currency of domestic increases becomes stronger, so it will, the external party will not be able to buy. Or if external party becomes stronger, we will not able to buy. So the thing is that whosoever currency becomes stronger, it has a negative impact on the on the exports. And if I tell you guys, exports are very important. I mean, just imagine a shop. This is a shopkeeper, for example, very nice shop, small shop. So if this shopkeeper is just buying raw material, inventory, he's just buying the stuff. He's not selling anything. He will be at loss. The best and the most profitable shopkeeper would be who is selling more stuff instead of buying. Similarly, take country as a shop. So it is good for a country to sell more and more. If the country is buying more, selling less, it is called as fiscal deficit. When the exports are getting decreased and imports are getting increased. So let's come back to the topic again. So why this devaluation is done, guys? Now I hope you got the point. Countries will intentionally try to bring their currency down so that this, this internal domestic currency, this always stays low. If it always stays low, it will be good for exports. And who is the most culprit? Who comes in your mind? Obviously China. China tends to decrease its currency multiple times. And China had, many countries had blamed China that they intentionally decrease their currency. You might have heard China is doing so much development, so much progress, everything is perfect in China. Still, their currency value is so low as compared to dollar, as compared to the other parts of the other currencies of the world. Why? Because they intentionally bring it down. Because if the currency becomes stronger, as I told you, it will impact the exports of the country. So devaluation is intentionally when a country tries to bring the value of the currency down. So it is done by the central banks. So under the fixed exchange rate system, it promotes the exports, guys. That is why it's beneficial. Why some country would devalue the currency just because of bringing the exports down. So foreigners will buy more. So the best example is China, and this will try to reduce the trade deficit. Sorry, I mispronounced a word. That was fiscal. Instead of fiscal deficit, is trade deficit. Fiscal deficit is government deficit of expenditures and income, basically. Now, this devaluation is more frequently done by China. India also did it once in 1991. We were having, issue with the Forex. Our exports and imports were really hampered. So we intentionally brought it down. And after this, only LPG reforms came. I hope you know the story. We will discuss this story some another day. But in 1991, our exports were very, very low, right? Uh, and we were importing more and more stuff. We were not open economy. So at that point of time, we tend to attract more external customers. We tend to decrease it down. It is good for tourists because if the currency value is less, the best example is if you go to Nepal, enjoy the money means from 1 rupee, the currency exchange is so different over there, so less over there, you can enjoy the money over there. Means so that is why if the currency value is less, more tourists will come. Means Nepal is having less currency value as compared to India, so you can enjoy your money over there. Sri Lanka, Pakistan. So you go to Sri Lanka, you can have best life over there. Means 1 rupee is equivalent to quite a high number. So you can buy a lot of stuff over in Sri Lanka. So tourist increases, very obvious, right? But the thing is that it deteriorates the credibility of a country. Why? Because people will lose the trust on the country. It means country is quite culprit. It means you will it is quite mischievous, guys, when a country intentionally do it. Means if everyone starts doing it, it's very bad, right? It's only China who is blamed for such kind of activities, or the rest of the world is doing fine, basically. What is depreciation on contrary to this? Devaluation, I hope you got the point. Devaluation is done intentionally. When the value of the currency is intentionally brought down by the central banks and the governments, right? On contrary, depreciation, guys, it is happening automatically by markets, by demand and supply, by laissez-faire. I hope you know the word now, what laissez-faire is. So it is happening automatically. So you might have heard, rupee is getting appreciated in front of dollar and like that, dollar is getting appreciated, then appreciation of dollar is taking place. So it is happening under floating exchange rate. So you don't have to worry. It happens day to day basis. And every day the value is getting either up or down. And the rupee is getting depreciated as compared to USD. That also is very important. Comparison to what, right? So it promote exports. Why promote exports? Again, the value of the currency is going down. Over here, it is intentionally gone down by the central banks. It is happening automatically on day-to-day basis. So if depreciation is taking place, the exports will obviously go down. Foreigners will come, tourists will increase. The outcomes are same, but why it is happening and why this one is happening, the reasons are different. That is the only thing. So I hope this is clear to everyone. Now, devaluation is more stable. It is more long run and it is more controlled by the government and is more effective as well. That is why government would do it, right? Whereas depreciation, guys, it is uncertain. Next month it could be something else. Today, tomorrow, it is very, very dynamic, basically, fluctuating. Market decides that. So that is why depreciate. If a rupee is depreciating, now the question is that should be coming in your mind now. So which one we should be following then? Means which one is better? Means if rupee is depreciating, is it a good thing, bad thing? So that answer I'm just going to give you in a moment. Means if rupee is depreciating, well, really it's fine. But first of all, you must think rupee is depreciating with respect to which currency? Is it Pakistani rupee, Sri Lankan rupee, Nepali rupees, or dollars? You have to see with comparison to what. Second, the second thing that I'm going to just let you know means what if rupee is depreciating, what is the outcome of that? We are going to see it just in a moment. But I hope till now everything is clear to you. Now, guys, again a very important question I would like to ask from you that would you like to settle abroad? If yes, why? And if no, why? I want you to think and I want you to answer afterwards means what you would be doing, right? So this is the question. Should you settle abroad? If yes, then why? If no, then why? So let's answer the question, guys. Think, pause, and then come back. In the meanwhile, I'll answer the question. Guys, the thing is that this depreciation is happening automatically according to market, free markets, demand and supply, laissez-faire. I hope this is clear. But there is one more exchange rate. This exchange rate was market exchange rate. It is dynamic, floating. There is again one more exchange rate. This is purchasing power parity, PPP. This exchange rate will decide what is happening inside a country. Basically, this is the purchasing power of a currency. I'll come back to this just in a moment. Let's give you an example first. Guys, if I tell you, if I let me ask you a question, means you might have heard $1 is equal to now it's around 83 or 84 rupee. You might have heard this thing. That's, from last year it was 75. Today, it's 84. What is happening, sir? Something wrong is happening with the currency, right? So it could be like that. So it means 1 rupee, the value of rupee is getting depreciated. But if I tell you, guys, today $1 is equal to 17 or 20 rupee. Maybe it's around maybe 19 rupee or 20 rupee right now. So $1 is equal to 17 rupee. Let's take an example of 17 rupees only. So how it is possible? One side I'm saying $1 is equal to 80 rupee. Another side I'm saying $1 is 17 rupee. Which one is accurate? Then? So the answer to this would be that market rate, $1 is equal to 80 rupee is exchange rate, market rate, depending on demand of a currency. This PPP, it is basically dependent on purchasing power of the currency. So it means whatever 17 rupee can buy in India, means if I can buy a Pepsi bottle in 17 rupee, the same stuff I can buy with $1 in America. It's not 80 rupee. It is 17 rupee. It means we are not that far. It's just close, guys. Means a 17 rupee, if I can buy, what I can buy in 17 rupee? I can buy a packet of chips, 17 rupee, right? or 20 rupee packet. For that, I need $1 in America. It means our purchasing power is good in India. It's not bad. It's quite good. And in America, it means the value of dollar is very inflated. It means America is having quite huge amount of inflation. Means to buy one chips packet, you have to spend $1, guys. Just imagine. For 80 rupees, you have to invest in America. So if I am sending my currency to my child or to my friend who is studying in America to buy one chips packet, I have to send 80 rupee to him, which I can buy just at 70 rupee in India. So this is purchasing power. There's a difference, guys. So if I had asked you a question, sir, we should settle abroad, yes or no? So the answer would be, see, though it is a personal choice, but if you are going just because of these exchange rates, guys, America is having huge amount of inflation. A packet of chips that is costing 20 rupee over here, that same packet will cost $1 in America, or maybe more than that. So standard of living, to have that similar standard of living that we are having in India, we need to earn a lot of money in America because inflation rate is very, very high. Expenditure is very, very high over there. I hope you're getting the point. To have the same standard of living what you are having in India means a maid, a house servant, or a good big house and like that. You know, those things you need to get those things in America, you need to spend a lot of money, right? This is number one thing. Number second thing is that America could. One more thing I would like to tell you: if you are earning 1 lakh or no, more than 1 lakh rupee in India, you can have a good standard of living over here because our currency still is having good purchasing power, guys. But if you are earning 1 lakh rupee in America, it will be difficult, very difficult, because a small haircut that is costing 20 or 30 rupee in India, that same haircut will cost you 10, $20 in America. Just imagine, it is that costly. So the purchasing power of rupee is not has not gone down basically, guys. It is still in optimum level. So we don't have to worry. So if exchange rates are getting affected, means today, for example, $1 is 80 rupee, next day 90, or if it's again 75, you don't have to worry. Because just because happening because of demand of one currency over another currency that I'm going to discuss just in a moment. We should, being an economic student, being finance student, we should be seeing that what is the purchasing power of the currency? Is it getting affected? Now, a best example I would like to give you over here is that, mm, see, this is US dollar to Pakistani rupee today. One US dollar is 278 Pakistani rupee out of, uh, it's just out of the boundary. Now, let's see, uh, 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 huh. let's see in PPTP terms. Okay, so India, Pakistan. So in India right now, we this is a website of IMF, guys. So this is authentic data. Today, PPP, in terms of PPP, we are in 20 rupee. So what 20 rupee can buy? Just packet of Lays. As simple as that, guys. One packet of Lays in India is of 20 rupee. The same packet of Lays in America would be in $1. Just for an example. Now let's see Pakistan. 11 PQ. So over here, if I tell you, I can't find it. Just a minute. China, Afghanistan. This is Pakistan. 66 rupee. You can see in the map, guys. So in terms of PPP, it is 66 rupee. So to buy a one packet of Lay's Pakistan rupee, they need to have around 67 rupee. Seven, you can take it around of 70 rupee. 70 rupee is the cost of one Lay's packet in America, in Pakistan. The same packet in India is 20. The same packet in USA could be $1. Just imagine, guys. The thing is that it is the purchasing power of the currency. So it seems like our purchasing power is doing good. We don't have to worry. Then you should be asking, sir, then why the price of dollar is increasing so much? Because dollar, see, this is also one more question over here that I was about to ask you, that why dollar is so much in demand? See, guys, dollar is the only currency that is used in the international trade, that is used everywhere, right? Now, what happens over here is that more the demand of the currency, higher its price will go. So, if someone asks you, rupee depreciated with respect to dollar, true, absolutely. But does the same rupee depreciated with respect to Japanese yen or with respect to Pakistani rupee or with respect to Sri Lankan or Nepalese or some another country? So answer would be no. Our rupee is doing good. It's just the demand of dollars have really gone very, very high. Now, one more reason for this was, let me tell you, a practical reason for this. Mm, 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 mm. World map. So guys, what exactly happens over here is that dollar is used as international currency, first of all. You must be knowing. All the international trade takes place with dollars. So these countries, these Gulf countries, you must be aware of these countries. So these are the Gulf countries, guys. Let me enlarge it. So Gulf country like Qatar, Kuwait, Iran, Iraq, these countries are called as OPEC countries. Russia is also a member of this. OPEC countries are Organization of Petroleum Exporting Countries. Basically, what they do in entire world, the cost of petrol or crude oil is decided by the Carter of these countries. These countries has an union. These countries every year they meet and they decide the barrel rate of the crude oil. And this crude oil is traded in dollars throughout the world. This is also one of the reasons. Second reason is all the international trade, it takes place in dollars only. So more the countries will use dollars, more demand will rise for the same dollar. So it's not that our currency is doing bad, it's just the demand of dollars have gone up. So this is another way of seeing the things. That is why you might have heard many a times Russia is trying to use its ruble for international trade. China is trying to use its own currency, but it is not getting successful. Means again, the entire world is still using the dollars only for the international trade. So that is why the demand of dollar is so high. That is costing basically the depreciation of rupee with comparison to dollar basically. This is clear to everyone. The market exchange rates are very dynamic. It keeps on changing. Every day it will change. But PPP, it doesn't change. Now, one more example I'd like to give you. This is the PPP rates of Indian rupee with respect to dollar. So it was again, guys, in 2010, it was 14 rupee, 15, 16, 18 rupee, 19. So it's quite constant. It's not declining anyway. Means, it's quite constant. It's not abruptly changing. And we had managed to fix it in 20 in 21. Just imagine with Pakistan, it was 66 rupees, 67 rupee. And for another countries as well, let me show you. So these all are the countries. So, Mongolia, 1000 rupee. So it means the purchasing power of their currency is too low, too low. Myanmar is 500 rupees. These are our neighbors, guys. Let's see for Sri Lanka what it is. If it is, so Sri Lanka, there is no data as such. So Sudan would be very less, 500 rupees. See, what I wanted to say, these countries, it means the currency can't buy the stuff. The currency is it's losing its power, purchasing power, basically. So if I calculate GDP in terms of market exchange, then USA is having 19 trillion, China 12 trillion, and India is having the fifth rank. But if I calculate the same GDP in terms of PPP, purchasing power, so our rank is third. So it means we are doing good in terms of our currency. We had maintained that currency. So nothing to worry about. It just people don't understand means what is the difference between market exchange rate and PPP. So if I ask you the question again, should you get settled in America, in a foreign country? Absolutely, you should go. But make sure your earnings are good in those countries because if your earnings are not good, it will be very difficult for survive. And if you're earning same amount of money, 1 lakh rupee or 80,000 or 1.5 lakhs, you are in top 1 or 2% in Indian earnings, guys. So it is also equivalently good. But I would suggest if you're earning good, go abroad. If you're not earning good, it will be the life would be, you will struggle a lot. Then why you should be going abroad? The reason, to settle abroad would be quality of living. That quality of living is missing in India. Means Their per capita income is good, standard of living is good, better health, education, better health, better education, better environment at least, better air to breathe, right? Better transportation. In India, these things are missing. We are lacking in these things. We don't have good infrastructure. We don't have good railways. We don't have good trains, buses. Transportation. Health facilities are overburdened. Education is not world class. So for these things, yes, you can go, but not only for the sake of money, because we have to see market exchange rates as well. If you are sending your money from there to here, that's fine. If you are doing some consultation online, work from home online, and the company is paying you in dollars, again, it's good because you are earning the same amount of money over here at market exchange rate. You're getting better returns, and PPP of India is also good. So that is again a good option for you. I hope you got the point. Now let's see the definition part. I hope you understood the concept, guys. So market exchange rate versus purchasing power parity. Market exchange rate is determined by Forex market demand and supply, only demand and supply, right? Influenced by many indicators, interest rates, geopolitical stability. Means, guys, crude oil, if also affects. If war takes place, it will affect interest rates of monetary policy. It will also affect. So these are sentiments. You can't change the sentiment. This will take place because of sentiments. But PPP is relative cost of goods and services in different countries, and it is for long term, guys. So this one is better way of analyzing a country. So if you want to analyze how the living standard that would be in a country, see the PPP. Means at how much money you can buy what kind of stuff. You can compare the things. So for comparisons, basically, PPP terms is used. If you are going to settle in any country, try to use this currency rate. And once you go there, guys, then after that you will realize that would be really very bad. Because I have many friends and relatives who are in Canada. They always tell that the prices are so inflated, the real estate is so inflated, you can't buy a house over there, you can't buy a home over there. The medical facilities are so damn costly over there because inflation is very, very high. I hope this is you're clear with this. So that is why dollar is so much in demand, and this is called as water diamond paradox. Diamond is just a stone, guys. It's just a stone like other stones. But diamond is in so much demand, that is why the cost of diamond is so high. The only reason is that. Similarly, dollar is just a currency like other currencies. The demand of dollar is so high that appreciates its value in market. If tomorrow demand of Indian currency goes up, India also tried to use its own currency in BRICS, but it couldn't work that way. So demand of Indian rupee goes up, even our market exchange rate will also go up. But again, it's just depending on which currency is used internationally for the trade. Now, guys, what is trade deficit? So trade deficit is just deficit means there is some deficiency in this. So what I wanted to say, when exports of the country they are less and imports increases, so the value becomes negative. This is called as trade deficit. So there is one homework as well which I would like to give you. So I want you to find out top five imports and top five exports which we do in India. Means what are the top five exports and imports? And to safeguard this trade deficit only, guys, because we Indians we import a lot of gold. We are a gold saving country. We use jewelry, weddings, and every main auspicious events. So the thing is that we buy a lot of gold, and to buy gold, we have to import gold, guys, and this affects our trade deficit. So that is why government, a few years back, they started sovereign gold bonds. The main reason was this only, to safeguard the trade deficit and to stay positive in this. So our the and one more thing, the recently government is encouraging a lot on on solar lights and electric vehicles, and even a hydrogen car is also on the way. The thing is that crude oil is also one of the major imports of Indian government. So again, to safeguard this trade deficit only, government is trying to discourage people to buy gold, and they are encouraging people to buy electric vehicles. So they're giving subsidies on this. So have you got the point? This everything is done to safeguard this trade deficit only. I hope now this is clear to everybody. Okay. So guys, you might have heard multiple times that you know dollar with respect to this currency, Indian rupee with respect to this currency. So these are called as base, these are called as pairs of the currency. Means currency comparison is, whenever if you hear these terms like you are getting appreciated, the currency is getting depreciated, it is happening with respect to some another currency. There is a pair of a currency that is, that we have to relate with. So you might have heard you might have seen these types of, you can say, the currency pairs. And there are charts going on. You might have seen YouTube videos or in movies that, currency, the USD is becoming strong and INR is is depreciating. Why? Because these are the pairs, guys. It will happen in comparison to some another currency only. There's no other way out. So this is a way of mentioning or representing the currencies in pairs. So let's see how it works. So the top part, it is the top part and the denominator part. The top is part is called as base currency, with whom I'm going to compare my currency with, and the bottom part, the denominator part, is quoted currency. So when I will be mentioning this thing like 1 divided by 86, it means 1 US dollar, that is the base currency. 1 US dollar can buy 86 rupee, right? Or 86 rupee is required to buy 1 USD. So base currency would be in the top. So quoted currency is the amount of currency that is required to buy the base currency. It could be said like this. So whenever you see pairs like this, you might have seen pair like this as well. It can be represented in this way: USD, Japanese yen. So if it is 105 or it is written like this, 1 divided by 105, it means 105 yen is required to buy 1 USD, or 1 USD can buy 105 yen. So this way you can interpret this thing. And these are dynamic numbers. Means this can go up to 1 divided by 105.111. So it is up to pip level. We are going to discuss these things, what is pip and all that, how the trading takes place. And we may tell you practically as well in sensible how the trading in forward contracts, currency tradings takes place. But the thing is that the margins are so low that you are making profits in just paisas, right? And to convert that paisas into rupees, you have to buy huge volumes. Means, it could be $1 is equal to 86.111 paisa, like that. So it is triple one after decimal there, triple one, 86.111. So see, just imagine. So you have to buy huge number of volumes to convert that thing into paisas. This is first thing I would like to say. One more thing I would like to say, this currency pair can be represented in ratios as well. Means euro with respect to USD is 1.11. So it means euro is this number of times to USD. So it is easy way. These are just what you can say. I forgot the term, mathematical term for this. So these are just the the way we used to represent it in the in mathematics. It is just the top number divided by the bottom number, means numerator divided by denominator. That's it. So this is very simple to understand. I hope this is clear to you. The quotation of the two different currencies are called as currency pairs. Major pairs could be Euro, USD. It could be anything, guys. The pairs could be anything. Great Britain pound with respect to USD, US dollar, Euro with respect to Great Britain pound, Australian dollar with respect to Japanese yen. So there are so many ways currencies can be, matched together. Insensibly, we can buy forward contracts, but the trading part is banned by the government in India. We can't trade on the currencies basically. But I hope in future we are going to cover these topics as well, that how the currencies are in, we can invest in currencies, we can use hedging currencies as hedging tool in India, basically. So for that, we need to learn some derivative parts. So I hope this is clear to everyone that today we discussed that should we get settled abroad, and apart from this, we discussed how the market exchange rates takes place. What is PPP and market exchange rate? Who decides these exchange rates, right? I'm the process of deciding the market exchange rate. We are going to discuss in the next slides how it is decided by in mixed economy, in communist countries and capitalist countries as well. Means how RBI tends to regulate it. It's not controlling. just trying to regulate it, manage it. So how it is done, we are going to discuss in the coming classes, guys. So I hope I answered many of your doubts today. So one more thing which is left, that is balance of payment. See, guys, this is again very important. If I tell you that whatever transactions which take place internationally, means I am buying something or I am selling something, these transactions, they are, the way it is, it is written in the books in accounting, that is two-way system, right? We have double entry system in accounting as well. Similar way, the double entry system is done in within a country as well. So we also manage the books in the same way. Every country manages in the same way. That is why it is called as balance of payment. Means both left hand side and right hand side should be equal. So it is a situation where the country cannot meet its international obligations. Means I am not having money to pay back now. So again, it's a double entry book system, and it is the transaction of the world I am noting in the entering in the book basically. So what is happening if we are having persistent trade deficit? Means we are buying more. Just imagine yourself as a shopkeeper, guys, and this is inflow and outflow book. I am buying more. I'm not selling. First thing, I am having loans as well on me, right? My savings are also getting depreciated. I mean, forex are also getting depreciated. The currency is also getting forex our reserves are also getting exhausted, and currency is getting depreciated, guys. So in this situation, we won't have the money to pay back, right? To imports for our imports. Means if I want to buy something, I don't have the savings. I can't get a new loan now. I'm just buying things and my people are getting hungry. So this type of situation is called as BOP crisis. If I relate with the country, all the countries have some forex reserve. Means they keep some foreign currency as a backup for emergency. They keep some forex, some bonds, international sovereign bond, some gold as a backup. Try to just imagine everything gets exhausted. The same way it's happening in Pakistan, the same way happen in Sri Lanka as well. If it get depreciated, right, get exhausted, the currency PPP value is also getting very bad in a very bad situation. Though in India it's very good till now. We are importing more, we are exporting just nothing. We are just buying the stuff. Just imagine a shop who is just buying and not selling at all. Such kind of situation would become BOP crisis. And India had also faced this thing in 1990s. That is why Mr. Manmohan Singh, we will always remember that person being a finance minister and being a prime minister as well. When he was finance minister, he was the only person who opened Indian market to the world, and our exports also increased. So in 1990s, India was in this situation only, BOP crisis situation, balance of payment crisis. Our exports were all-time low, forex reserves were already diminished, and we were having our growth rates were completely low. People were really hungry because of famines, and they were under poverty lines. So we and IMF and World Bank, they refused to give the loans to us. So we were not earning anything. We were not open. And then from these crises, we decided to bring LPG reforms. We opened our market. People came to sell here and we started growing. We started exporting stuff as well. We started good companies as well. So this is how entire, economic condition of the India changed. And this is how from a closed economy, we became an open economy. I hope this is clear to everyone. So this is called as balance of payment crisis. The same situation right now is faced by Pakistan and Sri Lanka as well. I hope this is clear to everyone. So forest market is very important for international trade. Forest market helps us in multiple situations because it is good as investment tool, and forest market is the only thing which will help us to decide whether to get settled abroad or not. I hope on the